Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Monday Madness. What is up, Team Chuck with Traders War Room, and I'm back at you with another video. This is your Monday Madness, and I got a fantastic video for you. One of the discussion points today that we're going to talk about is what happened in the marketplace, because it caught everybody off guard, all right? I'm in a lot of other servers, and there was a lot of commotion with a lot of people positioned wrong for the type of push that we had today. It caught your boy off guard too, and it caught a whole bunch of people because the market was signaling one way, and then it absolutely just reversed 180, and it kept giving the signals of continuing to go back to the downside, and then it just exploded back up. And it caught a lot of people off guard. There was a lot of despair, a lot of discussion points about giving up and stuff like that. And I want to chop down kind of what happened in the marketplace and get a battle plan and a strategy in place so that we are good to go with a plan of action no matter which way the market goes, whether it goes up, whether it goes down. We're informed and we can make those tactical decisions that really matter when you're in the trenches and the war is right there at your feet inside of the stock market. So I got a great video for you. At the end of the video, I'm going to put all of our products and services and the TWR stuff at the end because I want to hop right into the video and get started ASAP. So without further ado, let's go ahead, and if you're ready, just follow me and let's go to war together, Team Traders War Room, baby. Let's get it right now. Stay tuned at the end for TWR Hot Products and Services. Alert update. So let's start out with the weekend swings that we had. We had Johnson & Johnson 170 call that we entered at 15. We had an Apple 167.5 call that we entered at 75. And we had a Microsoft 280 put that we entered at 72. Let's see how those ended up. Now, this one hurt, especially seeing how the market ended up going into close. We ended up cutting this at the bell, man. We couldn't take anymore. We thought that we would get a gap up. Instead, we got a gap down. It was just losing too much steam. So we went ahead and preserved capital and went ahead and cut this. And this was a $50 per contract loss, and this one stung a little bit. And we're still holding into J&J, so no more updates on that one because we're still in that trade. We'll see how it plays out the next couple of days. Went ahead and wanted to day trade a little bit, and SPY was not our friend today. We got into this 402 put because we saw the downtrending pressure, entered in at 45. And the chop today just absolutely was destroying premium. So we ended up cutting this at a $22 loss. We were looking for another trade, going back in, looking at the reversal. So we ended up trying SPY again on some heavy downtrending pressure. And once again, no dice. And this was very frustrating because absolutely the signals were strong and had strong conviction with follow through on multiple time frames. And then as soon as they get to a certain level, it just reversed so dramatically that it just caught you off guard and just took away all of the premium that you had going the direction, and then you had to hit stop losses. And so in order to preserve capital, we went ahead and cut very quickly on both of these trades because we just weren't playing the game, and SPY was not being targeted very well today, for me at least. And it wasn't just me. There was a lot of people that had issues, but yeah, SPY was terrible for me today. And my limit is 2 failed trades on a particular day trade, and you got to cut it and you got to go do something else because you're just going to waste money getting pissed and losing your cool trying to chase some things. So the key to today, if you take anything from these 2 losses specifically, is that when you notice that the momentum has shifted dramatically, cut it and then look for another entry. Sometimes it's not going to work. As you see here, if you get to your threshold of risk with a particular item, go ahead and just take the knee and go ahead and say, you know what, I'm going to bow out today. I'm not going to trade this ticker anymore because I'm just not seeing it today. Reevaluate and come attack it again with clear minds on another trading day. Now, with SPY absolutely being our enemy today, XOM was very kind to us. We ended up getting in this 115 put at 123. And we're taking profits on this one, man. So we ended up cutting at that 170, and that was good for $47 per contract. Left 3 to swing, but tight stop losses on it. So we'll see what we have at the bell tomorrow. I'm thinking that we can escape out with a little bit more come early in the bell and see if we get a nice swing trade off of this. But man, with the way the market was going today, we were not going to leave anything on the table, especially with those 2 failed SPY trades. So I know I always tell you guys that we aim for $100 to $1,000 per day, but days like today, it's just good to come out green. So the total on the day: Apple -50, Microsoft +63, SPY -33 with both those trades, and XOM 47 for a grand total of plus $27 per one contract per trade. Basically, if you followed my alerts with at least one contract and you entered around where I entered and you exited around where I exited, you would have been up positive $27 on the day for the trade. So not necessarily the best we've had before. Like I said, today's market caught a lot of people off guard. We're going to talk about it here in a little bit. But essentially, green is green, and we live to fight another day. So we take that knee, we dust our boots off, we get our weapon ready for tomorrow, and we come out ready to fight when that bell rings. Hot trends. So here's how your markets closed today. We were green in the Dow, green in the S&P, and the NASDAQ was red. But I want you guys to note, man, there was barely green in both the Dow and the S&P. But man, today's price action, if you guys were paying attention, it felt as though this was a boom-tastic type of day, right? And that's because everyone got caught off guard with this. When the futures came out this morning, it was pointing to the lower opening, and everyone was expecting continuation from the downtrending, right? Because you had the S&P and the NASDAQ both pushing to the downside. And then all of a sudden, we got some resurgence and a quick reversal. Then, of course, we got a dramatic sell-off, and everyone started going short again, right? Expecting that we reached the pinnacle and that we were going to go ahead and get our follow-through to the downside, which everybody was expecting. But it slightly went up in a low drip the rest of the day. And this chop that it kind of was pushing up and coming back down, this absolutely destroyed premium, specifically on the day trading. So this is what caught a lot of people off guard. And when I show you the chart here in a moment, we'll break it down a little bit more, and we'll get our battle plan to go forward with the idea for both a long and a short strategy, so that we're not caught off guard again and we're prepared to absolutely attack. Here's your futures, and I don't want you guys to get caught off guard because we're going to pay attention to the futures when we look at them in pre-market. But bright green across the board, pretty much futures. So we will see what happens in pre-market, and we might have to adjust the strategy just to take into the battle of the land that we have up front. But we're going to get a great strategy to get us ready so that we can go attack tomorrow. Here's some market stats, and you can basically kind of get the impression that it was kind of a 50-50 day. And actually, dare I say, it was a little bit pushing to the bear side, even though it felt like a huge bull run that we had today. But when we look at the main chart, we realize that it was just a slow kind of drip. And it kind of gives me the impression of like a wedge or ascending wedge that is looking to hit a pinnacle before we start to break down. That's what gets me really interested in seeing how we open up tomorrow and how we got follow through, because I'm anticipating the breakthrough to the downside, because I think we hit the resistance between the 410 and the 411 area on the SPY, but we'll have to see. Here's your sector performances, and this was largely because of the boom push that we saw basically in the materials and energy sector. Those absolutely exploded once we got into the intraday part of the market session. They just took off from nowhere, man. And basically they had been beat up the previous week, like especially the industrial area, and a lot of people were flowing money into those. And it'll be interesting to see if they can hold, because typically what happens specifically with the industrials and the energy sector, and you even got the real estate up there as well, these like to run hard. Energy may stay there a little bit longer because of that OPEC plus, ruling and stuff like that. However, the industrials and the real estate like to pull back after they get some decent gains. So I don't think they give all of this back, but I wouldn't be surprised to see these in the red tomorrow or dramatically decreased from the push they had. And we'll probably see a rotation in the underlying assets into other funds, such as the consumer services or the communication services and utilities. But financials and technology were kind of 50-50 in the realm. Technology kind of suffered a little bit, and financials had a decent day. Maybe we see a little bit more push in financials since they got the beginnings of earnings closing out the week. We talked about that in yesterday's video, but we'll see what we got when the market opens tomorrow. And I wouldn't be surprised, so mark my words, the industrials and the real estate. Energy may stay because of the OPEC thing, but industrials and real estate, I got a feeling in the next day, market day or two, that we'll see this back to 50-50 line, if not in the red. Some flow for you. We're leaning a little bit more to the bear side than the bull side when you look at the numbers compared, right? Tesla got a lot of calls going both ways. SPY, again, calls going both ways. The bull is kind of living a little bit better on the SPY side. But when you look at the numbers, we're looking at a little bit heavier volume on the put side. People are seeing the market for what it is. They're expecting that pullback at that 410, 412 area on the SPY because that is a heavy resistance, and they're not expecting us to be able to breach that and have the run towards 416 or 417. Dark pool, and of course you got SPY leading the way. But what I want you to take note is that the Q and NVDA started getting some elevated dark pool activity. Okay, so definitely we're paying attention to that. All right, a lot of these dark pools come in as bigger block type trades, and we want to make sure that we stay ready to react to volume pushes and sentiment pushes on these particular tickers, because these will be fast moving and big money makers. Here's some unusual options for you. And what we like about this, as always, is this gives us kind of cookie crumbs to grab it into and look for the cookie that'll satisfy us, right? So we're looking at these as ideas that kind of take away some of the noise out there when we're searching for things. And we'll look at these and kind of wonder why these are unusual. You know, what do the big money see in these, particularly that maybe the smaller retail investor is not seeing currently? And so we'll pay attention to these. And if we start to see any of the volume or any catalysts associated with these, you know, we can't be afraid to pull the trigger and make some money. And right here, what you're looking at is high implied volatility tickers. And why we like these is because it's not just about derivatives or options that we're looking. We're also looking at shares too, and we're looking at the underlying asset. The underlying asset is what gives us the ideas for the derivatives or the options, but we're also trading the regular stocks as well. And so anything that is moving, we're going to try to make some money, and we're going to try to see if we can get a good dramatic catalyst for a dramatic push. So when we see the spike up in the implied volatility, that means big money is also anticipating a dramatic push or a potential binary move, and we want to catch that early so we can catch it at the bottom and ride it to the top, or we catch it at the top and ride it to the bottom on a sinking ship. Hot off the press. So, top news, it was all about EV mileage ratings, right? So, the U.S. proposes to slash EV mileage ratings to meet fuel economy rules. So, basically, the U.S. Energy Department on Monday proposed reducing electric vehicle mileage ratings to meet government fuel economy requirements. And it's a move that could force automakers to sell more low-emission cars or improve the conventional models. What the DOE wants is to significantly revise how it calculates the petroleum equivalent fuel economy ratings for electric and plug-in electric hybrids that utilize the National Highway Traffic Safety Administration's corporate average fuel economy program. So this will be interesting to see how this affects the EV market specifically. We saw Tesla already do some EV cuts. We're seeing some other, EV automakers trying to make it more plausible for, people to get these EV cars. And we're starting to see a lot of push on the government to make it, basically illegal for car manufacturers to make the combustional type of engines in the near future. So it'll be interesting to see what happens, and we're definitely paying attention to the EV sector because we might be able to catch some runners on these as well. Now, in the broader markets or the global economy, popular emerging markets trade back with global rates, right? So, what the IMF is predicting that developing economies, particularly in Asia, there's that buzzword, Asian emerging markets, will be bright spot as the U.S. continues to slow. Bloomberg's Shirley Ann and Marcus Wong, they discussed this in detail tonight. But the big takeaway here is that while people are saying be afraid of China, be afraid of the European companies and stuff like that, you got the other side of the house that's saying, well, hang on, the U.S. is pausing for a slowdown on the economy. GDP's lowering, we're starting to get the slower rapid growth and stuff like this. But we got these other places, specifically China. There's that buzzword again, China, right? Then they're about to start opening their economy and go full ham, right? So why not take advantage on some of these emerging markets that are bound to have some bounce from post-COVID pandemic type of responses while the U.S. cools down. So, but I do want to caution you, be careful when you're investing in these emerging markets, because as quickly as they rise, they fall just as quickly, especially when the tried and true markets that we have known and loved and are stable, and we've seen them do their thing in any type of volatile market conditions. Once they start getting their footing again, these emerging markets go back to the wayside, and you go back to the Apples, the Microsofts, and the other ones that are seen as the better bet for longevity. And oil is big market news as well. It's inching up, weighing OPEC plus supply cuts against rate hike fears. And so the oil prices edged up as the market participants weighed supply cuts from OPEC plus that would tighten the global markets against concern about further interest rate hikes potentially hurting on demand. Investors were awaiting a slate to report the inflation, oil demand, and supply due to the week that could give the market decisions. So we're definitely paying attention to this. Some of my favorite oil tickers that I like to pay attention to, XOM, CVX, and I'm paying attention to Oxy as well. So definitely keep those on your radar, and you can always go into the oil and refinery ETF as well for a little bit safer bet. But I do like XOM and I do like Oxy as far as individual individual underlying assets for trades. Stocks I like. All right, so I promised you before we get into really the stocks that I really like going forward, I want to talk about this, okay? So here we're looking at SPY, and basically we're looking at SPY back in, you can see way back when, like January of 2023, and it got it high, right? That 470, okay? And we got those lows in October over there at 345. So I want you to pay attention to these two lines real quick. So these two lines are basically giving us our broad price action of what we've had. And as you can see, we're still currently downtrending. And we will still be downtrending until we break this point right here. And it's represented by that orange line right there. So basically, we're looking for a break above and a maintain of 427 to truly break out of our bearish momentum and go into a new potential bull trade to the upside. Now, this area right here is super important because this is what gives us our first indication. A break above this 416, 417 area. This gives us our first idea that, you know what, hey, we might be into a new bull market, because this is giving us our first break out of our downtrending channel. But the reason why we wait for this one is because we want that confirmation, right? So this is the actual confirmation that'll give us that absolute, no doubt, you know what, we have to accept it no matter what type of trader you are. But if you're a bear trader, you have to accept that we have now cleared the first line of effort and we've gone into the second line of effort, and the bull market is upon us. Now, this point right here, represented by the gray line, this 410, 411 area, this is uber important as well, because this is basically what I like to call the trench war. And what I mean by that is we will see absolutely heavy fighting in this area between the 409 and the 411. What we need is a close above this heavy line of both resistance and support, and it's going to be the fight. Who's going to win? If we can close, and I would give this more to be a little more conservative, a close above 411 solidly on a day chart, and we close above that completely. No, spike, line that we get some wicks or something, but we get a solid candle that closes above that, we can expect the follow through going towards the 416 area before we start to see the next area of the battle happening. Right now, it's not as much resistance as you see in here, but it is still heavy resistance that keeps us from our follow through to the upside and looking at the 420s, specifically that 427 that'll give us that break into the new bull trend on the S&P. So here's the game plan, right? If we are able to secure this level right here, this 410, 44, 410, 50, and specifically we're able to close above and break out of our trend line here, then we have to respect the trend and we got to go long and expect that we get an eventual push and possible attack at the 416, 417 area. However, if we hit heavy resistance and we fail to break out and hold this level, we have to respect again the trend that we're not ready yet, and we are headed back down towards that red line right there, that 403 level, with probably a retest of 400 to see if we can truly hold this upward trend. So too long didn't listen, right? You just want the levels? I got you. If we hold above 411, that's going to equal long positioning, and we're going to eventually head towards 416 to retest that upper level. If we fail to hold that 410 area, then we are going to head down to the 403 area with the possible retest of 400 as a high probability of success. Now, you might be saying, I can't afford to go SPY that far out, right? Because SPY is expensive, especially with premiums popping, right? And giving yourself time on SPY gets costly. But what pushes SPY? Apple, Microsoft, NVDA, Meta, Netflix, Tesla. You guys can play these other big market cap, high liquid, high volume trades because they're going to trend in the same direction as the broader market, almost guaranteed. If we fail these lines, you're going to see a lot of auto triggers coming in, and they're going to start triggering to the downside, and it's going to push the general market down because these big ticket items are the ones carrying with the weight. All right, now we got that out of the way, and you got the breakdown of the plan as far as the broader market is concerned. Let's look at some other trades that we like potentially to close out this week and get some strong positions on to make some money. All right, so one trade I want you to pay attention to is Ali, right? This is a financial play, and we got the top trigger and we got the bottom trigger. But what I like about this is that we have some ground that we can come, even if we don't catch the whole run back up to the 30, right? If that's not going to happen. Right now, looking at this particular formation that we have a potential for a break to the upside to at least go retest that 27.31. So if you start to see financials being a little bit bullish with some momentum in them as a whole, then this would probably be an all right trade with a relatively low expense cost to go ahead and think about getting into something long, because the likelihood of us continuing to the upside as long as the financial banks hold up the rest of this week going into the banking earnings into next week is that we'll probably make back some of this that we took away. Now, I do get worried at these type of patterns because once we start creeping up to the upside, the likelihood of us going up to the top and meeting resistance and then pulling back down, losing all of those gains that we had is high probability as well. So we'll have to definitely watch it. And this would be a decent trade to go ahead and play up to the level 27.31 or $28, and then expect us to hit some resistance and come down to the downside. So I would not be thinking this would explode out going back towards that 30. I'd be looking for a shorter type of trade on this, a $1 to $2 push to the upside, and then hitting some of that resistance and coming back down. Baba is interesting, and it's trading within a decent range. Now, this has that emerging market, that China type of factor on it. Looking at the chart right here, we do look like we're looking for a potential cool down and a pull back down towards that $99 area. So I'd be more bearish on this one. However, it's gone back to that level before, and it's rejected the bottom level and pushed back up. So basically, we're looking for the breaks. If we get the break above that 103.25, we can probably expect a decent push towards 105, 106. And if we fail to get that breakout above, then we can expect the pullback to go retest that $99, $98 area. So you got to play it the both ways. So the triggers are definitely important if you're going to trade a China name like Baba. But just going off a technical aspect of this, we lost all of our moving averages, and we're looking pretty rough for a continued effort to the upside. So I'd be looking more to the short side of this. I think that we go down and we start to retest that $64 range. Now, could we see the little bit of a surge? Absolutely, we could. But I'm looking at the technicals on this one, and I don't think we have the momentum going in our favor right now. We might go back up to 65 and test that area, but I think we hit that rejection point and we come back down to eventually hit the $64 range. So this is, I'd be looking for a little kind of a mini leap, looking for contracts pushing out a couple weeks, maybe a month, and going to the 64, maybe even the $63 range, going slightly out of the money. Riot is interesting. As long as crypto keeps pushing, Riot will push along with it. If you guys remember, this used to be like a $60, $70 stock, okay? So at this particular price, if the crypto market keeps up its steam, this will end up eventually pushed as well. So we definitely got triggers on this. We can make some decent money capitalizing on the momentum. We're looking for calls to the upside, anything above that 1132, because we have a clear path towards $13 if we get a clean break above that. Anything below that 10.25, and we're probably looking retesting those $9 ranges. TTWO, I like this one for a push to the upside. I think that we can break that 121 area and we can go up and retest the 122 with follow through to 123. So I'd be looking more to the call side on this one. If we can keep up the steam with, the particular stock itself. Now, if we can't hold that level, the likelihood of us coming down to retest that 119 and even go a little bit further to go retest the lower level at 118 is high probability. So keep these triggers in mind, and if we get our trigger cleanly above or below the trigger line, go ahead and pull the trigger and take the trade. And final one I got for you is Google. I like Google to the downside, actually. I think that we're step laddering down. We hit a pinnacle and we cooled off and we kind of are in this consolidation mode. I think we get the step ladder down. So I'll be looking for this to cool off. And I think 105 puts or pushing down with follow through to 104 is about right, given this dramatic push that we had from 100 all the way up to 107. I think that we cool down and we give some of that back. 104, I think we'll find some support and probably bounce a little bit, but I do think that we're headed down. So I'll be looking to go ahead and go short on this one for continued follow through. Now, this one's interesting too because it'll follow the broader market. If you start to see SPY pop and you start to see kind of those AI and software and tech names popping, this will go ahead and pop as well. But otherwise, if we start to see the weak volume and the weak momentum along with this one, we can go ahead and expect the short-sided house to pan out and with a probable eventual hitting of the 104 level. Upcoming events. Our next class is set, and you can go ahead and sign up today on the website. You go to traderswarroom.com/upcoming classes, and I am going to teach you how to chart and trade patterns. 23 April at 1 p.m. Central Standard Time. $15 gets you a seat, and all purchases get the recording. So, and if you can't make it live, no problem, because I'll send you the copy. Just make sure You register your name and email from the email that you get after you purchase the class on the website. And I'd be reminiscent if I didn't tell you that TWR's official merchandise line is active and it is ready for your purchases. The link is in the description and you can get all your TWR swag like these items. Fitted hats, one size fits all with the TWR logo. 3 different styles of shirts in the 2 different banner colors of TWR. We got all the sizes from small all the way up to 3X. And you know we got them hoodies because we want you to sport TWR swag in any weather conditions. And it's the same thing. We got 3 different type of hoodies and the sizes go all the way up to the big boys. So get your swag gear on and show that world who you're rocking with. The link to order is in the description and it has fast deliveries. The market is our war zone and stocks are the battle. Join TWR and let's go to war. Make the market bend the knee in 2023. Join Traders War Room and bow to no one. Let's go to war.